Good day, investors. In this video, we're taking a closer look at Palantir Technologies following its Q1 earnings. And honestly, this was not just a strong quarter, this was a blowout. 85% revenue growth, 60% adjusted operating margins. And more importantly, growth is actually accelerating, not slowing down. So in this video, we'll break down the key results, the fundamentals and growth outlook. Then we'll take a look at the valuation. And finally, I'll give you my personal take on whether Palantir stock is a good investment opportunity right now after the earnings. But before we get into it, don't forget to leave a like for the YouTube algorithm and subscribe for more upcoming investing videos. Thank you very much. Now, if we start with the highlights for the quarter. Palantir delivered exceptional growth across the board. US revenue grew 104% year over year to $1.28 billion, with US commercial leading the way, up 133%. And even the government segment remained very strong, up 84%. Overall revenue came in at $1.63 billion, up 85% year over year. But it's not just growth. Profitability is also scaling rapidly. Adjusted operating margin reached 60%. And free cash flow margin came in at 57%. That leads to a Rule of 40 score of 145%. At the same time, deal activity remains extremely strong. Over 200 deals above $1 million, and total contract value reached $2.41 billion, up 61%, with US commercial backlog more than doubling. So overall, this was a quarter with explosive growth, strong margins, and accelerating demand. Now, if we take a closer look at what's actually driving this growth, it really comes down to AIP and the US commercial segment. Palantir Technologies' US commercial revenue grew 133% year over year, and still accelerated 18% quarter over quarter. At the same time, customer count grew 42% year over year, which shows this is not just bigger deals, but also more adoption. And importantly, remaining deal value in US commercial jumped 112% to nearly $5 billion. That tells you the pipeline is building very quickly. Deal activity is also scaling fast, with large deals growing around 1.6 times year over year, and total contract value in US commercial reached $1.18 billion, up 45%. So when you put it all together, AIP is clearly driving strong demand, more customers, and a rapidly expanding pipeline. Now looking at the earnings per share, Palantir reported earnings per share of 34 cents for the quarter. But more importantly, look at the trend in profitability. Net income has been steadily increasing over the past few quarters, reaching $871 million in Q1. That's a massive jump compared to just over $200 million about a year ago, which clearly shows the company is not just growing fast, but also scaling profitability very efficiently. So what this tells us is, earnings growth is now becoming a core part of the story, not just revenue. And looking at the margins, we can see a very similar trend. Palantir reported a GAAP operating margin of 46%. And just like net income, operating income has been steadily increasing quarter after quarter, reaching $754 million in Q1. That's a significant improvement compared to last year, which clearly shows the company is gaining strong operating leverage. So overall, as revenue scales, margins are expanding, and profitability continues to improve. And looking at the Rule of 40, which is basically a measure of growth plus profitability, Palantir reached a Rule of 40 score of 145%, and that's extremely high. For context, most strong software companies aim for around 40%. While even top-tier companies are usually in the 60 to 80% range. So at 145%, Palantir is operating on a completely different level right now, and we can also see a clear upward trend over the past few quarters. So overall, the company is delivering both exceptional growth and exceptional profitability at the same time. Now, when we look at the US revenue overall, Palantir grew 104% year over year, reaching about $1.28 billion. And what's also notable, growth accelerated 19% quarter over quarter, which shows strong momentum continuing into 2026. So overall, the US market is clearly the main driver of growth right now, and demand continues to strengthen quarter after quarter. And if we break down the US revenue by segment, we can see a clear difference. Palantir Technologies' US commercial revenue grew 133% year over year, reaching $595 million, while US government revenue grew 84% year over year to $687 million. So both segments are performing very strongly, but commercial is clearly growing at a much faster pace. This shows a clear shift in where the momentum is coming from, with commercial now driving the majority of incremental growth, while government remains a stable and important contributor. And now looking at total revenue, Palantir Technologies grew 85% year over year, reaching $1.63 billion. And growth also accelerated 16% quarter over quarter, which shows strong momentum heading into 2026. And importantly, this growth is being driven primarily by the US business, especially the commercial segment, which we just looked at. So this really ties everything together. Strong US demand is driving overall company growth. Now, one of the most important parts of this quarter is how efficiently the company is scaling. Palantir reported adjusted operating income of $984 million, with a 60% operating margin. And if we look at the trend, margins have been steadily improving over the past few quarters, from the mid 40% range to now 60%. At the same time, operating income has scaled significantly, which shows the company is gaining strong operating leverage, even while continuing to invest heavily in AIP and growth. So when you put this together, Palantir is not just growing fast, it's becoming more profitable as it scales. And if we look at customer growth, this is where we really start to see demand translate into real adoption. Palantir total customer count grew 31% year over year, reaching just over 1,000 customers. And if we zoom in on commercial customer count grew even faster, up 34% year over year, which clearly shows strong adoption of AIP, not just from existing clients, but also from new customers coming onto the platform. So when we look at this trend, Palantir is expanding both depth and breadth of its customer base, which is a very strong signal for continued growth. Now, another important indicator of demand is deal activity. Palantir Technologies closed 206 deals worth at least $1 million in the quarter, and within that, 72 deals were over $5 million, and 47 deals were over $10 million, which shows strong traction not just in volume, but also in large, high-value contracts. So what this tells us is, demand is not only increasing, it's also moving toward bigger and more strategic deals. And when we quickly look at the balance sheet, Palantir Technologies is in a very strong financial position. The company ended the quarter with $8 billion in cash and equivalents, and importantly, no debt. At the same time, cash from operations came in at $899 million, with a 55% margin, and adjusted free cash flow reached $925 million, with a 57% margin. So what this tells us is, Palantir is generating strong cash flows, while maintaining a very solid balance sheet. And moving on to guidance, Palantir is expecting continued strong momentum. For Q2, revenue is expected to come in between $1.79 and $1.8 billion, with adjusted operating income of around $1.06 billion. So the near-term outlook remains very strong. And looking at the full year, the company is now guiding for $7.65 to $7.66 billion in revenue, which represents around 70% growth. And importantly, U.S. commercial revenue is expected to grow at least 120%, with adjusted free cash flow between $4.2 and $4.4 billion. This clearly shows strong confidence from management, especially in continued demand from the U.S. commercial segment. So after looking at the earnings figures, let's zoom out and look at what's actually driving this story going forward. And when we look at the growth drivers for Palantir Technologies, it really comes down to its role as a core AI infrastructure platform. The company is positioning itself at the center of critical industries, from defense and government to healthcare, energy, and industrial operations. And the key idea here is, Palantir is not just providing AI tools, It's building the underlying system that connects data, decisions, and real-time operations, which becomes increasingly valuable as AI adoption scales. So when we look at the bigger picture, Palantir is aiming to become essential infrastructure for AI-driven organizations. And one example of this in action, Palantir is deploying its Maven Smart system across the US Department of Defense. This is essentially an AI-powered platform that helps military operations make faster and better decisions. And the key point here is, Palantir is taking AI out of the lab and putting it into real-world, mission-critical environments. So what this shows is, the technology is not just theoretical. It's already being used at scale in real-world, high-stakes environments. And on top of that, Palantir announced an expanded partnership with Airbus, where Palantir's software is being used across operations like production, supply chain, and airline management. And this shows that the company is embedding itself deeper into large, mission-critical organizations. And once these systems are integrated, they become very difficult to replace, which can lead to long-term contracts, recurring revenue, and high switching costs. And furthermore, Palantir is also partnering with NVIDIA to build a sovereign AI operating system, combining NVIDIA's hardware with Palantir's software platform. And the goal here is to enable companies and governments to deploy AI securely, even in sensitive or isolated environments. So this becomes another major growth driver, because Palantir is not just benefiting from AI demand, it's helping build the full stack of AI infrastructure, from hardware all the way to real-world deployment. So after looking at the earnings and fundamentals for the company, let's now take a look at the analyst price targets for Palantir Technologies, according to stock analysis data. The stock currently has a consensus buy rating, with an average price target of around $191, which implies roughly 30% upside from current levels. And if we look at the range, the low target is around $50, while the high target goes up to $255, implying potential upside of around 74%. So there is still a wide range of expectations, but sentiment overall remains clearly bullish. Now, if we take a look at the stock itself, Palantir Technologies is currently trading at around $146 per share, giving it a market cap of roughly $350 billion. And the stock has had a massive run, up over 500% in the past 5 years. But at the same time, valuation is now quite elevated, with a PE ratio above 200 and a forward PE still above 100. So a lot of growth is already being priced in, which means, from here, execution will be very important, as the company needs to continue delivering strong results to justify this valuation. So when we bring everything together, Palantir Technologies just delivered a standout quarter. Revenue growth accelerated to 85% year over year. Demand in the US remains extremely strong, and profitability continues to scale, especially on the commercial side, where adoption is ramping very quickly. At the same time, the company is delivering very strong margins and cash flow while continuing to invest in growth. But the bigger story here is not just the numbers. Management is positioning Palantir as the core AI operating system for real-world use. Because while AI models are becoming more accessible, enterprises still need control, security, and reliability. And Palantir believes its platform is what makes that possible. On top of that, guidance was raised significantly, reflecting strong confidence in continued demand. So the takeaway is simple. Palantir is no longer just a high-growth company. It's scaling rapidly, with strong margins, and positioning itself as a key player in enterprise AI infrastructure. So in my opinion, the stock still offers upside at current levels, and the valuation can be justified if execution remains strong, because a lot of future growth is already priced in. So from here, it really comes down to execution and sustained demand. But if Palantir continues to scale at this pace, this could still be a very compelling long-term opportunity. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching, and happy investing.